Hello, everybody. It's straight up on the top of the hour. Thank you all for being here. We'll just give it another 60 seconds or so to let some stragglers come in, and then we'll kick things off. I'll be right back. Hello, everyone. Welcome. Glad to see everybody here at this afternoon's Leadership Perspectives event. I'm Kurt Greenbaum, Director of Communications at WashU Olin Business School. Thank you for joining us. WashU Olin is proud to bring you the Leadership Perspectives series, where we host illuminating discussions with an impressive lineup of speakers from various perspectives. In a moment, we'll hear from our moderator and guest speaker, both accomplished Olin alumni. WashU Olin is a community of people dedicated to pursuing new ideas and taking on challenges. Events like this afternoon's contribute meaningful insights and bring you to the gateway of ideas, innovation, and inspiration. Today's Leadership Perspectives event centers on staying true to your values, building consensus, and living a people-first philosophy. These elements combined can lead to greater satisfaction for the organization, its people, and its customers. It's an honor to have Katie Fogertey with us this afternoon. Katie is an Olin alum and a chief financial officer for Shake Shack. Katie and Professor Peter Boumgarden will discuss the quantitative and qualitative thinking needed to evaluate how to invest resources, time, and talent. After Katie and Peter conclude their conversation, they'll answer a few questions during the Q&A session. Please send your questions through the Q&A feature at the bottom of the Zoom screen. They'll get to as many questions as they can in the allotted time. So now it's my pleasure to formally introduce today's guests. Katie Fogertey has served as Chief Financial Officer for Shake Shack since June 2021. Before joining Shake Shack, she spent 16 years at Goldman Sachs, where she recently served as vice president and lead equity analyst for the restaurant sector. In this position, Katie focused on the impact of technology on restaurant profitability and market share. Additionally, she developed deep relationships and unique insights into the prominent peers in the restaurant industry. Before transitioning to the restaurant sector, she was a vice president and lead derivative strategist. And in that role, she oversaw single stock options in the United States and Latin America, as well as global ETFs and market structure. During Katie's tenure at Goldman Sachs, she pioneered numerous proprietary investments, primarily in the consumer and technology sectors. She holds a BSBA in accounting, finance, and international business from WashU Olin. So welcome, Katie. Next, I'd like to introduce today's moderator, Peter Boumgarden. Peter is the Koch Family Professor of Practice in Family Enterprise and the director of the Koch Center for Family Enterprise. He joined Olin's faculty in 2018, and he too is an alum from our PhD program. Across his work, Peter likes to say he lives at the intersection of theory and practice, design and delivery, values and data. He teaches courses on leadership, organizational design, and strategic management within Olin's undergraduate, MBA, executive MBA, and executive education programs. Peter's research focuses on the role of structure, both formally and informally, in shaping the innovation of groups, organizations, and broader network systems. And in addition to his academic work, he has consulted and run executive education programs with organizations across sectors, often focusing on refining their strategic direction, enhancing leadership development, and cultivating roots to drive increased innovation. My thanks to Katie and Peter for what I'm sure will be a robust discussion. So without further ado, I'll turn it over to them and let them take it from here.
Wonderful. Thank you, Kurt. I am going to ask next time that there's an introduction, I want to be introduced before Katie versus after Katie, just because it's so difficult, Katie, to keep up with some of those accomplishments. So great to have you here.
It's great to be here. Thank you, Kurt. Always great to talk to you, Peter, and thanks to everybody at the team for having me today.
Yeah, awesome. Well, let me just flag a few things that are relevant. If you find this content especially interesting, there's a couple things that are actually in related spaces in the next few weeks. Next week, Wednesday, we have a whole event with Continental Grain focused on food and innovation that will be live on campus. And then we have an event on October 25th, really focus in on ESG investing. And both of these themes we're going to dig into during our time here with Katie. All right, Katie, so I'm going to start out at the level of strategy for a second. In my preparation for today's event, I was texting a few former students, and one of them, who's a big fan of your product as well as your brand, was wondering a little bit around how Shake Shack has to compete in a slightly different way in today's market. So, for example, you're a little bit more elevated than your traditional McDonald's or other unnamed competitors. And yet at the same point, people might still see it as different or less intimate than a full-on restaurant experience. So it's always been the position you played in. But now we've got all these rising inflationary pressures. Things are becoming more expensive. So all of a sudden, a burger, the price there has to be passed on to the customer themselves. So we'll get into some of the ways that you do this with data and the like, but I'm curious how you think about the strategic challenge or the strategic position that Shake Shack is in this changing world.
Yeah, I mean, that is such an amazing question to start to kind of pick apart here. For those who are not aware, Shake Shack has about 400 restaurants across the world. About 240 we own ourselves, and the rest our licensed partners operate. So there's Shake Shacks, in St. Louis. There's Shake Shacks in New York. We came out of a hot dog cart out of Madison Square Park. That's kind of what started the whole company. We have, Shacks all around the U.S., but then also China, Japan, Korea, Middle East, Mexico, and London. And so, the story in each of those markets is a little bit different, but still always the same. And we always go back to what are our roots? What are we trying to do here? We are, at the end of the day, providing our guests with an uplifting experience. We want to be that really great, trade down from maybe instead of going to a local restaurant, they're going to have a great time at Shake Shack. And, while we're more expensive than Burger King, which is, we are a really good deal when you look at kind of the other options that kind of sit in that more casual dining category. And then within fast casual, we are leaning in with our digital platform to provide more convenience than ever before. And, look, like, it's not every day that you're going to get a burger, but when you do, we have non-hormone, no antibiotic, hamburgers. We have no corn syrup, all of our dairy, all of our shakes. We just take a lot of quality in the ingredients that we provide. And that's just what makes us different. So, it's both having a more elevated kind of fine dining spin on what a roadside hamburger joint might look like. But at the same time, providing that great guest experience. We really do lead with our team members first. And if you read the book, Setting the Table, by Danny Meyer, which I fully encourage everybody to do, it really does kind of walk through the ethos of how Shake Shack came to be, the leadership structure. And when you think about, the different cohorts of people, of interest groups that you have in a corporate structure, you have shareholders, you have employees, you've got customers, you've got your suppliers, everybody kind of fits in this wheel. We really do believe by investing in our people and our team members and putting that first, that at the end of the day serves the best long-term shareholder value creation. You see, they provide a great team member or great guest experience. They cook the best food. And, we know that the team members that stick with us the longest is just more efficient for us as a company.
That's great, Katie. So let me push you on a few points here, just because I want to see if I can flesh this out. So does that comparison matter? So imagine, for example, here in a short bit, I'm hungry. It's almost 5 o'clock, or will be 5 o'clock soon enough. And if I'm comparing you, for example, to Burger King, then all of a sudden it's going to feel expensive. But if I'm comparing you to that local restaurant, it might feel like a great deal, faster, great experience itself. Are there things that matter from the way that you message that start to shape the attention or what I pay attention to? And I guess what I'm especially curious about is, does digital change that at all? So here you have an ability to kind of move people towards the product in new ways. Does that change that dynamic?
So yeah, I mean, at the end of, beginning of all of this, who is our guest and who is the person who comes into our restaurant? And that's where, having the data, the insights, the analytics, and also a digital platform is hugely helpful. It's not too surprising, but we do skew a little bit more high end than traditional fast food. And so what does our guest want? We're not going to win on the guest who wants 10 nuggets for $1. Like Burger King's going to win that. McDonald's going to win that. What we're going to win is the person or the group of people who want a really uplifting experience and they want really good food. And you know what, if it's $5 for a Shack burger or $5.50 for a Shack burger, it's not going to move the needle that much for them. And they are willing to pay for that. And by the way, the entire restaurant industry is having to take record price here. So, you also have to kind of look at that. If it's $5.50 for a Shack burger versus what is it for a Chipotle burrito versus what is it for kind of, you name it, we're still really good value. And that's kind of how we look at it.
Yeah, that's great. So you mentioned a couple of these global locations.
Mm-hmm.
So I'm thinking now about London, right?
Mm-hmm.
So if you're following the news in London, cost of energy is way up. Inflation is even more aggressive than it is here.
Mm-hmm.
Do you see spikes like that start to change what people pay attention to? So here I am as the consumer. Gosh, last month, 2 months ago, 6 months ago, I would have loved a burger. But right now, maybe I should cook that pasta at home. Do those inflationary things, even if it hits all of you and your competitors, start to change where people go?
We're seeing kind of, I would say, multiple cross currents of this. So, and this is true across the entire, world. The world is still coming out of COVID. Some areas people have kind of exited lockdown earlier than others. But overall, mobility still has not, or how people are moving around, we are not at the same patterns that we were prior to COVID. There's some areas in the South which have fully recovered, but broadly speaking, even New York City, mobility is, at 75% of what it was prior to COVID. There's still a very good run rate to recover. So while we're seeing some, economic, pressures, especially at our low end guests, which we under index to, we are at the same time seeing kind of this more return to normal, people wanting to go back to restaurants, people wanting to go out and travel. And we're also kind of seeing a little bit of that benefit from, people who are tightening the belt a little bit, but they're not going to cook at home. They might not go to their local restaurant. They might not go to, a casual diner, but gosh, let's just go to Shake Shack and have a great time.
Interesting.
And that's probably where we're going to end up, getting our wins from. We're not going to be able to, hold on to the super low end consumer. And then your point on international is really interesting. And we talked about this last quarter, but the FX headwinds that we're seeing right now, I mean, the dollar is incredibly strong. And Domino's actually reported this morning, and they took down their guidance because anybody who is, realizing revenue in a local currency and has to translate that into dollars, it's a headwind for you.
Mm-hmm. Yeah, fantastic. Well, let's shift a bit now from strategy into method. And so one of the things that you bring to bear in this new role coming from your work at Goldman is this ability to think quantitatively, but also mixing together some qualitative insights. So I think you call it this, what is it, a quantimental?
Quantimental.
I like it. That's a nice branding there. So quantimental approach to evaluating strategy, mixing together quantitative and qualitative information, whether it's something tied towards the people side of the house or resource deployment or a number of other things. So if I'm trying to explain to someone over my Shake Shack burger later on today what a quantimental approach is, and maybe an example of how that would shape the approach to Shake Shack moving forward, what would you say?
Sure. I mean, basically, look, a lot of times in organizations which are not data advanced, people are just using their gut, or they feel this way, so this is the way it has to be, or we've always done it this way, so we need to keep doing it this way. And taking a quantimental approach is really saying, I know you do it that way, but here's a model that I've taken using all of our data, and this statistically shows us that this is the more likely outcome. And this is what, and I always find that, you're never going to win, or you'll rarely win with somebody if you're just battling your views of how things should be without data, right? It's, I feel this way. No, I feel this way. Well, I've been here longer, or I've seen this before, or you can't move the ball forward. Let me tell you, it's super effective. I feel this way. Boom, here's the data. Everybody has data, and it's very clear and easy. And so that, to me, is just such a winning strategy and such a great way to bring people along and affect change. One example of this is, quite frankly, around COVID. As I was talking about mobility, or the way that people are moving around, it's changing and evolving. What did we see, when COVID first came out? What happened? Everybody just stayed at their home. You saw mobility just plummet. Then you started to see gradual working out, people who had jobs which, were deemed, that they had to go back to work. Some cities you started to see a little bit of increasing, some areas in the South where it never really changed that much. But mobility was impacted. People weren't moving around as much, and the hours that they were moving around were very condensed. The late night business completely went away. And people were going to go out, to go get lunch. Maybe they went and got, an early dinner. Nobody got morning coffee. Things changed. Now, as we're evolving, we're noticing that people are coming back to cities more, and also they're staying out later at night. Now, we're not where we used to be, but we're better. So, for example, when, my conversation with operators is, you should open up your restaurant. You need to open up your restaurant later. Right now, they're going to say, without data, they'd say, no, nobody's around. We're not going to staff it. We're not going to open for that extra hour because nobody's around. When I show them the mobility data, I'm like, well, actually, you'll capture more sales if you stay open that extra hour than you did in the hour prior. And they're like, that's interesting. I'm going to do that. And you get this really great change management system on that side. People just need data. A lot of times they don't have enough of it, or they have too much and they can't make sense of it. Data insights and analytics is kind of everything.
So I want to see if we can dig into this a little bit. So I've done some work in the healthcare space around data. And so imagine physicians that are making decisions at the point of surgery. And there's a lot of interesting data.
That's a little different than
little different.
It's open 30 minutes later.
Different kind of surgery, I guess. Different kind of surgery. So
I don't make life or death calls here.
So imagine you're going to a surgeon or to a doctor, and you give them information that says, on average, this is the best way to approach the work. Well, on the one hand, you need them to trust the data. And so I can imagine in the context of Shake Shack, you might have some people that maybe don't trust data. Maybe they weren't trained in data like you were, or your team was. And then the second piece, which is a challenge with surgeons, as well as it would be with an operator of a restaurant, is that it might push back against my own desire for autonomy. So I want to make the decision. I feel like I'm an operator. I want to be able to make a call about how we best serve the customer. And you, Katie, at corporate, you don't understand exactly what it's like here in my particular Shake Shack in Ladue, Missouri. And I need to do it this particular way. So trust of data, as well as how data might make people feel like they're not necessarily in the same kind of autonomy and control to drive it. If those are two headwinds, first off, I'm wondering if you would see that at all in the context of Shake Shack. And then secondarily, how would you address it?
Well, I would say, people here are just hungry to do better. They really are. And I think it's just part of our DNA. People are constantly pushing, constantly doing, and they know that, if you see analysis which suggests you should be doing something different, as long as people present it in the nice way, and you're not like, there's two approaches you can take, right? I could sit there and go and be like, you're such an idiot. I can't believe you didn't know this. I'm the smartest person in the room, and blah, blah, blah. There's really not going to get you anywhere. But if you say, hey, look, we've just been like investigating the situation. We're seeing that, as we track cell phone usage, like this is what's going on here. It looks like based on this model that you should be getting this much more in sales. Then they are bought into the process and you bring them along. And I think that what this highlights is what the common problem is with a lot of people who kind of come from more of a strategic background, trying to then go to corporate, is we can put anything we want into a model, right? Mm-hmm. I could put down that our COGS are going to go down to here and our labor is going to do this, and then we're going to have all of this EBITDA and everything's going to be great. But guess where the hard work is? It's actually doing that. And that's literally everything. So kind of on that side, you have to bring people along with you on the journey, and, they're going to put their own spin on it too. So maybe they're like, I'm not going to buy you on that full hour, but I'll get you on half hour. I'll take that. You want to know why? Because that same person's going to come back to me in another month and say, you know what, I want to go full hour, or I want to go hour and a half now. And you don't have to have people, you don't have to have, full followance day one, just starting to turn the head a little bit towards the, the data light or what you're saying will affect change over time. And you'll just bring people along with you and you'll celebrate the wins. They win because they have more sales. Their restaurants are more profitable. I win because, obviously I'm trying to deliver shareholder returns. This is all better for the company. And, people just need to feel part of the process. Sometimes, when we're looking at statistical models, there is like questions of like, what are you doing? Why is this significant? What variables are going in there? And that's where I think bringing people along the whole entire process of the model creation is so important. From day one, what we're building, the data sources that we're using, making sure you're getting their input, testing things, even if you think they're not going to be important, right? Still test it anyways. Sometimes they are, you just have to have an open mind and making it feel like it's also their work, that they've had a part in it. That's how you're going to get people brought along to change. You're never going to be effective if you just sit in your back room or in the basement, come up with this whole strategy and just jam it down people's throats. It's all about the buy-in.
Interesting. Well, let me take us through a few examples here just to, again, continue to flesh out this understanding. So we have a question in the chat from Ravi that's talking about a movement into the space of vegetarian or vegan products. Another question from someone who's anonymous that's talking about inventory levels and optimal inventory levels. Are those the types of decisions that could be informed in a creative way by, again, this mix of not just quant, but qualitative information? And how would that look around product extensions as well as something like inventory?
Absolutely. So product extensions, I think it's one of the more fun parts of the job is culinary. I mean, we have like the best chefs and we're right above the innovation kitchen. So that's awesome.
We should be doing this interview on your campus.
I know.
Why are we doing it here? Why are we on Zoom?
But what I would say is, look, there's a couple of things when it comes to product innovation. I'll use veggie as one because we do have a couple of tests in place right now. So we call Veggie 3.0. So this is our third attempt at coming up with a veggie burger. We also have a non-dairy shake in test right now. Yeah. The data would tell you, if you just look at the data, that guests less and less actually want veggie, especially at a hamburger place. And there was a big, you can remember, all the Impossible, Beyond Meat, all of that kind of competition that had come out a couple of years ago. You get a bump in sales and then it just falls off to the point now where Burger King's taking it off of many menus. Dunkin' had like a Beyond like sausage breakfast sandwich that they're now culling from basically every store that's not in San Francisco, LA, and New York, because they just don't sell. And then you have this inventory sitting there. It's taking up space on your menu because your team members aren't making a lot of it. It either turns into waste, or when they do make it, it takes them so long because they're like, oh, wait, I got to go to the back and get that thing out. Yep. When you're selling one of something per day, it's just not worth it. But we believe, and this is where, the data would tell us, don't do anything at all. It's not worth your time. And I've definitely made this argument before, especially like on prior things. But we believe that we have some story to tell here around veggie, and it's not beyond, it's not impossible. It's actually about using vegetables and real ingredients to create something that was actually like really, really good. And that is we know we're going against the data when doing that, but we're doing that eyes wide open. So that kind of is an example on that side. We'll often look at things like categories where we're under indexed versus our competitors. So whether it's areas of cold beverage where we see opportunity, where our consumers, what flavor profiles, or are they caffeinated? What are they wanting? How can we then leverage that to drive culinary strategy? And we also do tests. So if you come to our innovation kitchen in New York City, there's usually
when I come to the innovation,
exactly when there's always a couple of things that we're cooking up and trying and monitoring guest behavior. Are they trading off from a higher margin product to that product, or is this check accretive? Are we seeing that when they do a caffeinated lemonade, they're also doing something else very interesting, and we're just constantly studying that to help drive our strategy.
All right, so that's
question, yeah.
Well, so the other one is around inventory. So when you think about more of an operational issue, same issue, same data that's driving that analysis.
Yeah. So it's a little different, and it's really on a shack by shack basis and a product by product basis, where we'll look into how they're utilizing their inventory, how much of it goes to waste. So in restaurants, whatever you don't sell in a finished product that gets thrown away, like, we don't want that. You don't want to have zero waste, because we are very different than traditional fast food. We cook everything fresh for you guys. Like, it all comes out fresh, never frozen beef. Our chicken, we sous vide it, we fry it there for you. It's very different than like McDonald's, which has something frozen that they just give to you. And theoretically, they should have no waste. So we know we're going to have some waste, fine, but we want it to be within an acceptable threshold. And some of that is inventory management, and some of that's also the efficiency of our team members. So, it's kind of on both of those sides. And also on inventory management, a lot of that comes from demand forecasting. And that's where my team plays a very big role in going kind of shack by shack, channel by channel, and forecasting that business.
Great. Well, let me take you through one other example here that might actually bleed into the values of the organization as well. So you can go onto the annual report of Shake Shack and find out about all these amazing things that the company is doing. So whether it's working on the Human Rights Campaign Corporate Equality Index, that was a tough one to say as well. Almost as tough as, what was it, Shack by Shack sales? Same
Shack by Shack.
I was hoping I didn't have to say that, but so human rights, whether it's the 100% antibiotic and hormone-free proteins, supporting groups like the Trevor Project, Fresh Air Fund, etc., wage increases of 13% over the last several years. So all amazing things. But let's imagine for a second that the customer doesn't see or appreciate it. So for example, like maybe as great as antibiotic free sounds, I don't even really know what hormone free actually looks like. I don't have a higher willingness to pay as a result of it. But nonetheless, you all think it's still worth doing. So how do you do those things, right? Maybe the consumer cares about vegetarian fed, but doesn't care about antibiotics, or they care about certain value sets, but not the ones that you're proposing. How does the organization blend those things? Because I'm assuming many of them also have costs to the business as a whole.
Totally. We do sell a premium product, and that means that our COGS are premium. Part of this comes down to, there's kind of three areas of this. So part of it is very regional. So there's some areas of the country that just don't care. And we also, unsurprisingly, have lower price points in those parts of the country because the guest doesn't care there. And in other parts of the country, that's more important. The second part of it is there are some, for better or worse, sacred cows that we have here as a company. And we might ultimately one day change that, but to make a core change like that is a massive thing. It has to be treated very carefully. If we were to downgrade an ingredient quality, people have ruined their companies because they have done this. And we take this very seriously. Of course, anybody who comes in here would say, oh, well, just go buy, frozen ground beef kind of on the live market. You're going to be able to slash your costs by a massive amount. It looks great. Nobody knows the difference. I guarantee you, then there's nothing that differentiates us from Five Guys, Smash Burger, whatever you name it. It is the proprietary, blend of our meat and how we grind it that makes us different. And when you change that, you kill the company. So we're very aware of this. It's something we are very careful about making changes of, especially in this environment. I think a lot of companies are kind of downgrading their ingredient quality and kind of walking away from that, which might work for their brand, their customer. but we don't think that's the right strategy with our guest and our customer. And then the other point is actually a really important point. Maybe you don't care, Peter, because we haven't told you why you should
This
care.
is a hypothetical, Peter. I care about the hormone free.
Okay. No, I'm saying, but
Peter.
maybe our guest doesn't care because we haven't yet done our job to tell them that they should care. And so we, if you think about one of the great campaigns is, Chipotle's Real Ingredients campaign that I think that they did. They're at a much larger scale than we are. But I think when you think that you're not getting credit for what you're doing, you have to ask the question, have you told people the what and the why? And I think that's really where marketing comes into play. We as a company, just still being still in our early days of growth, we haven't really spent that much money on marketing. But as we get more scale, it's definitely something that's top of mind.
Yeah, it reminds me a little bit when I was first getting into the coffee world. But I would go into some of these coffee places and I could get, let's say, Starbucks for $2 for a glass. And then I go to a place that might cost $4 or $4.50 for what feels like the same thing. The challenging thing about the education piece, I would imagine, and you tell me if I'm wrong here, but the challenging piece would be that you want to educate without seeming too hoity-toity or too better than thou. So I had a couple of friends that went to this particular coffee shop and came away a little bit turned off because they felt like their taste in coffee was being critiqued. Or Starbucks talks about this when people early on would ask for cream in the coffee and they felt like they came away shamed. So when it comes to the actual education, pushing people to say, you should care about human rights, you should care about antibiotic chicken, you should care about wage increases in the way that we do this, and you're going to pay a little bit more because of that caring. How is that education done? And is there a way to essentially assess whether or not it's working using the same sort of quantitative and qualitative insights that we talked about before?
Yeah, I mean, I would talk about this in, at the very high level, we have a brand health tracker, which we very regularly track how consumers are viewing us across a whole bunch of metrics. And, these are never perfect studies, but we try to pick up on if we're doing something different, how that guest is immediately reacting. The other thing is, for better or for worse, we're a brand born on social media. And we hear about it right away on Instagram, on Facebook, it will hit us like a ton of bricks. So, there's that kind of thing. And then I go back to, hospitality is not what you do to somebody. It's not what you do to them. It's what you do for them and the way that you make them feel. And so I think, messaging that this is how you are what you're providing that's elevated and what you're doing for them, making them feel like this is, exciting and interesting and different than everybody else. That's probably the way to go. I agree. Some of this can be very preachy, but the people who have done it, I think incredibly well, have made people go, "Oh, that's interesting. I never knew that about that. I feel a little bit better now about going there."
Yeah. So it's both a mix of the content as well as how it's expressed.
Yeah.
Which I guess is tricky, right? Because you would trust yourself to do it, but then you have to not just trust yourself, but the store manager and the store employees and all these things here. Hence why it's important to select talent effectively, train them effectively, so on and so forth.
Definitely. And it's also why in this moment, so the restaurant industry is just going through extreme turnover. It's so hard to do that. It's hard to do that in like normal times, but it's harder than ever. We have a real shortage of people who, want to work hourly jobs in restaurants broadly, and you see it. So
fascinating. Well, I want to go back briefly to the team. I'm actually also trying to figure out in the back of my head how I can use a sacred cow joke. You've already used sacred cow once, so I'm going to get there by the end.
Okay.
But you have to do this work, this quantitative, qualitative combination with a relatively small team compared to, for example, I would imagine a larger data analytics team at McDonald's or Burger King or Chipotle, maybe even. So what is the way that you build a small but mighty team? What are the things that over the last 18 months or so that you've been at Shake Shack, you've been working to build the capability and competency of the organization for this kind of decision making?
Yeah, I mean, it goes on multiple different variables. So, part of it is I created a business intelligence unit. They didn't have one before. And it's a small, as you said, small but mighty team of super smart, very intellectually curious people who are just truly amazing in changing the way that we're able to make rapid strategic decisions. But the other side of it is, there's two other sides. Like one is really streamlining and making sure that what they're focusing on is the right thing, right? People can look and model every single thing in the book, but I think being able to take a top-down approach of what's going to be the most meaningful, what's going to move the needle the most. How do we prioritize in this world of very fixed resources? That's very important. So a lot of it is I'm managing, okay, this is the big rock, I think, let's attack it. And then the next big rock, and let's attack it and monitor progress. And then the last thing is, just continuing to build out our data infrastructure. We've been doing, been very hard at work at, making sure that we have the data available and the tools available for everybody to go fishing. I came from, Goldman, where, we were able to pull up any data point that we ever wanted, going back to the beginning of mankind, essentially. And, when you come to corporate, you very quickly realize, like, for many corporates, not all, there's some that do this incredibly well, but for many, especially a small startup-ish kind of company like ours, that's not there. And so I'm just building to make sure that we're getting more and more data into people's hands so that they can just fish themselves and they can ask the questions and can, learn the business better. I think that there's nothing more powerful than having somebody who's like, I wonder if this is the case, and then is able to very quickly get this data. Right now, if I go back to where this company was before, a lot of, if you had a question, it would take 2 days to get a report, maybe longer, and somebody would have to do it. And it was just like very long and clunky, and like maybe the data wasn't right, or they matched it the wrong way. Automating all of that and giving data to the people so that they can learn and, and ask the questions and make more intelligent, data-informed decisions is everything.
So that's really, really fascinating. So I want to kind of make a contrasting argument here, or at least maybe two different strategies. So you can imagine one strategy, which is saying we're going to build up a really robust data team, and we're going to be able to be big enough that we can centralize these choices, respond back really quickly, and therefore bring insights to bear on certain questions. And then another one is much more decentralized, which is, hey, you're the store manager at Central West End in St. Louis, or Ladue in St. Louis, and you're trying to find out why your turnover is high, or whether or not you're having more orders come through delivery services versus essentially people coming to the shop, all these questions that people might care about. It sounds like you tend to lean, at least in part, towards the latter, kind of democratizing data.
Yeah.
But are there challenges in doing that? For example, imagine I'm, again, going back to Ladue. I'm in Ladue, but I haven't necessarily been trained in how to think about asking good questions, how to think about what the control group is.
I'm going to throw another wrench at you.
Good. Yeah, I like it.
You are managing Ladue. You are working very hard all the time and do not have time to be tooling around on your computer, pulling data points. And so we have this kind of motto that we need to feed our operators the data that they need. So what I'm really talking about, yes, democratize the data, but I'm more focused on home office. The people who are doing analytics are making decisions. And by the way, like the stuff that the business intelligence team is doing, they're building like very in-depth models. Okay. These are things that most people would not be building, right? But if somebody in HR is like, oh, I wonder what sales of this location were historically, or how many hours they've been open, or why not? There's sensitive data that you should not put out there for sure. But giving people kind of a little bit more opportunity to learn about the business is everything. I think that like our digital team, for example, if they had, more capability to kind of pull into what's going on and how the digital business is impacting the business on a more real-time basis, it helps them just be more informed about their strategies. So that's kind of how I'm thinking about it. We do a lot to try to streamline the reports that we do send to our operators, but that whole process can be better automated with having more data in our warehouse.
So to some degree, it's letting the questions emerge from the bottom up where people are experiencing it, but not giving them another burden of you've got to go out and do your own report.
And actually, it's amazing. It's been so cool to see our ADs, once they kind of realize that we have this capability here, going straight to business. I have this idea. Oh, I have this. What if I did this? And what would this decision be? And that's awesome because, a model is only as good as what you're able to put into place. You're going to have, a number of situations where if we just sat here, like in the basement or wherever, and we're just modeling anything out and making decisions, they're never going to be as good as when you partner with an operator and you incorporate what they're actually seeing, boots on the ground with your work. That's where the real great stuff happens.
Interesting. So I want to go back to a point that we started to talk about earlier when it comes to you being a social media brand.
Mm-hmm.
And in particular, we might as well name I wanted to use sacred cow there. It's actually not a sacred cow joke, but to name the elephant in the room on some of these ESG concerns.
Mm-hmm.
So earlier on in the spring to summer, there were some people that raised a challenge about one of your suppliers.
Mm-hmm.
And in particular, the political affiliation of that particular supplier. And so what I'm curious about, and this is actually an area that's of significant interest to the academic community, is if that looks different in terms of your response, if it's, for example, a social media hive that comes up and says, we believe that you should not be using this potato bun, versus, let's say, if you had Larry Fink as a central investor who's saying you need to have different types of suppliers on X, Y, and Z dimension. So on the one hand, you've got to say, when should we respond? And then on the other hand, you're saying, do we respond differently if it's our customers or maybe our detractors that are bubbling up on Twitter versus a more centralized voice of one of our investors?
It's a great question. I think you also have to kind of measure materiality, and does that particular view, is it just loud, like the loudest people in the room taking up, the conversation, or is it representative of the
yelling
base?
Peter, right? Peter's just yelling a complaint.
Yeah.
There's
And
something.
like, what's the feasibility of it? With our suppliers, quite frankly, we buy meat from ranchers.
Mm-hmm.
There are many Republican ranchers. Our suppliers are not going to always line up with whatever New York ideology that we have, or whoever's ideology is on social media. And we know that. And it's something that we, continue to investigate, diversifying our suppliers. It's something that's just important and good business. But, we can't just stop having a bun, for example. So, I think that, we sometimes get in this trap of holding, I think this is just kind of general of corporate America right now, where, there's people who feel like companies should be doing something one way. There's also people who feel like they should be doing it another way. And it's really important to listen to everybody. But at the end of the day, if we go down a certain route on a supplier, there's just a limitless amount of things that we would have to do. We sell beef, probably, I don't really know how else to say this. Now on shareholder activism and ESG, that, is also something that we are just continuously trying to get better at. And, there are some requirements that are now, out there, and we, path to scope 3, all of these things that we're doing. But, we listen to shareholders, we listen to investors, we listen to customers, we listen to team members, we listen to everybody, and try to kind of, have the best strategy possible going forward.
Interesting. So let me just see if I can frame the first piece back to you, just to make sure I'm getting it. So one of the things that's important there is discerning, is this a singular voice or a material voice? Mm-hmm. So in other words, a loud Peter on Twitter versus something more substantial. Mm-hmm. A second piece of it is starting to say, how does this align not just with the values of our customers, but with the values of us as an organization? So there's a discernment there. Mm-hmm. And then a final piece of it is also saying, how plausible is it to be able to make a move on X, Y, and Z dimension? Is that a fair way to capture the way that you'd have to think about that?
I think that is. And, all of these things are important when making decisions. But yeah, I mean, I think really since COVID, there's just been so many opportunities and examples of where customers have pushed companies to do certain things, or demanded, certain statements to be made on various items. It's been very fascinating to watch.
Fascinating. Well, I'm going to start to transition over to a few of the questions that are coming in the chat. There's, again, almost 200 people on at one point on this call, a lot of interesting things that have been raised here. And a few of these conversations I've had with folks like Danny or Randy or others. So I'm curious your take on it as a whole. So one of the questions that's raised is around the delivery services.
Mhm.
So for example, the other day I was having Thai food. I was really excited about this Thai food and I ordered it because I have a young baby at home and I couldn't get out to the house. And I made the first order, it was $17, and then added another one and another one. And it looked like it was going to be about a $50 meal. And by the time I added on the tips, by the time that I added on the fees to the different providers, all of a sudden that ended up being quite a bit more expensive.
Mhm.
Now, then there's other plays, which is saying, let's not go through a third-party player. Let's think about doing this direct. We should own this experience. Imagine if you're a group that wants to make sure that you have a strong touch point with the end user. You might say our touch point could be at someone's door. So we shouldn't go through another outsourced relationship. We should do that more ourselves. So for you, how do you all tend to think about how delivery and online ordering starts to change the way that you still embody the kind of experience and price point you want to have for your customer?
This is a fascinating conversation. One thing, that $17 order probably would have cost you $10 if you went to go pick it up at the restaurant. And I think it really kind of highlights all the hidden fees here. There's literally no such thing.
Maybe I'm having massive regret now. I'm having massive regret about my $17
There's literally
meal.
no free delivery out there. Anybody who's telling you otherwise, they're bearing the cost everywhere else. We're right now charging 15% more on third-party delivery than in our own restaurants, and actually in our own delivery. If you go through delivery on our app, you get the best price. Chipotle is charging 30% more. So every time you get your Chipotle burrito through DoorDash, that's going to cost you 30% more, plus tips, plus tax, plus blah, 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 plus. And, I keep wondering when the consumer is going to kind of catch up to this. Consumers so far have seemed, much stickier than I would have thought on third-party delivery. We'll see kind of as the consumer cycle unfolds here in front of us, what they end up kind of getting rid of first. But it's very expensive for the consumer to do third-party delivery, and it's expensive for restaurants. So consumers still are not footing the full bill here. It costs something for somebody to bring you something within 20 minutes, like point blank. And by the way, it costs more for the restaurant to package it for that person to deliver you. And it's more, annoying from a logistics standpoint. So whoever has to run that order to the pickup shelf, all of that is just more. And also, not to mention that all of a sudden that's no longer your guest. That person went through that marketplace. They now have the option of, they want Thai, they want pizza, they want, the light went off here. Whatever it is that they want, they now can get it. So you're not competing. If you are that Thai restaurant, you're not just competing, with whatever's next door to you. You're literally competing with every single restaurant in your area. And that's no longer your guest. So I do think that there's just this existential question of how this all unfolds and the impact to restaurants. I think that the way that the consumer spending ends up, kind of playing out here with all this inflationary pressure and rapid rise in interest rates will be telling. But there is no free delivery. And then I look at kind of what the Department of Labor is proposing here with making delivery drivers full-time employees. Read a report that could, raise the labor for the, DSPs by 20% plus. I'm sure they're going to do a great job here lobbying against that. But, those are not the same business models when you assume that those drivers or bike riders or couriers are full-time employees. So that's kind of another thing to add. And then, on the do-it-yourself, right now, there's very few restaurants at scale which could execute on that strategy. I would say Domino's does it right now. So all of their drivers, they're not really on third party, and they're on the Domino's payroll. Essentially they maybe scrape by on delivery orders and they make all their money on pickup. It's just that expensive. And so if you are a smaller chain restaurant or a mom and pop, it's just very difficult to make any money with delivery.
That's interesting. So just one point here, Katie's light going off is a nice signal
I know,
of,
sorry.
no, this is a signal of important work-life balance at Shake Shack. So this is a nice way to signal that, it's when it's 5:45, people head home.
Yes.
But importantly, I want to kind of get at this education component. So you talked earlier about educating the customer, the importance of telling them about probiotic chicken, for example.
Mm-hmm.
Is it also important to do that on the delivery side, or should it be folded in? So for example, $17, I see it as $17. I assume it's $17. Is it important to say, well, actually the true cost here is 12, the delivery fee is an additional 5? Or is it important to say, well, we don't want to educate on that piece. Let's kind of fold it back a little bit so that it just seems a little bit higher. Is education the same story here versus it was earlier?
Yeah, we have, our own delivery. We have the benefit of having our own app. So not everybody has their own app. We have our own app that does our own white label delivery, and that is still our cheapest price. So we have something that we can actually, talk to guests about why our channels are better. And, I think if you don't have that message, it's really hard for you to educate, the guests on why, they should be coming into your restaurant if they don't have a delivery alternative. There'll probably be a tipping point on this. I've seen some brands before try to put messages in the delivery bag or like try to message it. For whatever reason, it hasn't yet been that driver to bring them back into their own channels. But we'll see as time goes on. It's certainly possible.
Interesting. So there's a couple of questions as well about labor. And so I'm thinking of the last year. In the last year, there's been a lot of talk about labor, even if you go back 2.5 years. So first off, it's unemployment rate. Then all of a sudden, it's really low unemployment rate.
Yep.
There's talk about the Great Resignation. That was the big story about 6 to 9 months ago. And then all of a sudden it was quiet quitting, people that are staying there, but being a little less plugged in. So I'm curious when it comes to labor, whether it's frontline labor inside the stores, whether it's corporate labor that you have that are working in your office that closes at 5:45. What are the dynamics that you're seeing on the labor side? And is the same kind of talent around digital analysis and quantitative analysis and what is my framing again earlier?
Quantimental.
Quantimental. How does that apply to the context of some of these labor challenges?
So, the number one challenge we have from a labor perspective is team member, and hourly workers are very hard to come by in restaurants. Yep. And, it's just getting harder and harder and harder. And, we now have tips, so our team members get tips. We've raised wages as you cited. And the restaurant industry just it's a net loser of employees throughout the COVID cycle. Now, I don't know how this will unfold. Things seem to be getting a little bit better, which is great. And, certainly, as people don't have stimulus anymore or other kind of back payments on that side, we are definitely, we're an industry that is short employees. So, we hope to kind of benefit and be able to, provide jobs to people who need them. But we're still in a very, very tight labor market. It's really been amazing. The jobs report every month just is not budging. So we'll have to see on that side. I am hopeful at the end of the day that, people will want to come back to work in restaurants. They'll remember how fun it is. We provide so much training to our hourly team members to bring them up to GM so that they can earn 6 figures, get equity. This is an amazing career path. And kind of really excited to kind of get back to those days where, we have a stronger pipeline and, we're able to be open full hours. And, it's just, kind of the restaurants that, you want to be in. It's really hard when you're a manager and you have instead of having 28 hourly employees on your, payroll that you can staff around, you have 5 who are all new. And you have every manager working, and it's just really hard. And our restaurants are so busy. They're not like any, we do 4 times the volume that a Chipotle does. So, and we're cooking everything from scratch. So it is a very, it's hard. You're sweating. It's a lot of work. And when you're short staffed, it's really, really hard. So, I'm hopeful that, through all of this, the industry will not get, more employees back. But then, there's other ways that we're looking to get efficiencies and do kind of more, take steps, motions out of the whole process, whether that's on payments and using kiosks to kind of automate that point of sale or other things as well.
So one more question on the talent side. One of the things that seems especially complex in this environment is trying to find ways that you attract people with pay, but also not get into a bidding war. So when I've spent some time with some of the fine dining folks, what they say is they might have someone who come to them and say, I've got a great offer. It's going to increase my wages quite a bit. And they might leave for it for a period of time and then actually come back because they don't actually like it, but they feel a need to actually have to match unemployment. So in other words, I can keep going up on wages. And then there's other things that are more investing in the actual workplace environment itself, trying to do career pathing in different ways. And then some of it might just be about branding. So you've got a show like The Bear that came out in the last bit that seems to imply that working in a restaurant might not be as attractive as it could be. So you have to make choices around investing in brand, investing in workforce or workforce pathing, choices around pay. So are there ways to run, for example, experiments that say, is an investment in one better than an investment in three? Is there an ability to look back historically? What do you think?
Yeah, I feel like the past year and a half has just been a lot of tests of all this. Does a retention bonus work? Does the hiring bonus work? If we move wages here, what can we do? And we're constantly trying to learn more about how we can make, this current situation better. And I think what you hit on is kind of true. Sometimes people will leave for a better offer, but a lot of times, and I think, you're better at this than I am, but the studies kind of show it's not always, especially at our home office, it's not always comp that's the leading, reason why people leave. They want to feel like there's a career path. They want to feel like they matter, that they care. We say that they're heard. That's a term that we use in our restaurants when, we're calling out orders or something, you respond with heard. And we use that here in the home office so that people feel like they're understood, they're appreciated, that they're treated with respect. And I think that that's really important. And I've seen people start to go, or teams start to go sideways just in my entire life when they don't feel like they're a valued member, that that their contributions don't matter, that the manager's just taking all the credit for themselves. And I think that, where you're a really effective leader is where you've built people up and they can showcase their talents. And it's not about you taking up, sucking up all the airspace and wind in the room. And I think that that's kind of how you get scale out of an organization. So, call it quiet quitting, call it the great resignation, call it whatever. And then, look, you just have to be very clear about this moment that we're in. And, I'm a working mother. I know there's probably, parents on the line. It has been hard. And, still even trying to figure out, transportation for my kids around events. Like it's hard to find childcare. My sister, she lost her babysitter and had to wait for 3 months to get into a daycare. These are all real challenges that everybody has. At the same time, our employers are calling us back to the office. It feels like we have to be there. It's just a really challenging time. And I think that the employers who work with their employees and help kind of, be the ear to listen, like, okay, I know you can't come in those 3 days that we talked about because, you're in the middle of childcare issues, or you need to go to that doctor's appointment. Totally got it. Fine. Those are going to be the ones who are more successful in retaining people than those that kind of call this very hard, I'm not going to negotiate. You have to be here because, frankly, you just have to make choices that nobody should have to make if that's the case.
Yeah. Well, Katie, other than the fact that you brought me back to the PTSD of thinking back about childcare decision and daycare closures, I'm essentially ending with a high degree of stress and heart rate spike.
I know.
But this has been a fantastic conversation. I really appreciate your willingness to share a bit of what you all are doing in the organization. We are proud to call you a WashU alum, and it's great to be in conversation with you today.
Well, thank you. Always proud of WashU and everything that you guys are accomplishing. It's so awesome to read about everything in the news. So
love it.
Thank you.
Well, I'm going to turn it back over to my colleague Kurt to be able to close this off for the day.
Well, thank you very much. And let me just say this was great content, great information, and I will say heard. Thank you so much, Katie. Really enjoyed this. I will also say I'm hungry now too, so thank you for that. So thanks again both to Peter and Katie for their time and for the business philosophies you've shared, particularly how your values have impacted your decision-making at the executive level. That's just the kind of values-based, data-driven thinking we promote at Olin. And of course, thank you, Peter, for facilitating this in-depth conversation. As I mentioned, today's discussion reflects the principled leadership, affects the principled leadership WashU Olin students develop as part of their Olin education, particularly in our graduate programs. A WashU MBA helps students be prepared to be values-based, data-driven leaders and to think about the impact of their decisions on the people around them and society at large, much like what Katie shared with us this afternoon. Students in our highly ranked full-time MBA are ready to lead in a global changing world, providing insight into how culture and values impacts business. To hear more about this program, join us virtually for an overview on Wednesday, October 19th from noon to 1 p.m. Central Time. To register, use the QR code on your screen now, and we're also sharing a link in the chat. We also offer an online MBA designed for those who aim to use digital technology as business strategy. You can learn more about our 100% online MBA for working professionals at our virtual class on Wednesday, October 26th at 5 p.m. Central Time. Again, you can find the registration link by scanning the QR code on the screen or look for the link that's posted in the chat. So once again, thank you for joining us for for this afternoon's Leadership Perspectives event. Please join us on Tuesday, October 25th in person here in St. Louis or online anywhere else in the world, when we host a panel from PwC to discuss ESG. Don't miss this if you want to understand what exactly ESG is and why everyone is talking about it. Use the QR code again on the screen or check out the link in the chat now to register for that event, and we hope to see you there. We'll see you next time. Have a great evening.